It is September the 28th. Michael Vaughn with Brian Acker. Brian, we have reached the last trading day of Q3 of this year. Let's do a quick review of the Canadian and U.S. funds, and then we'll figure out why.
Okay, so our select U.S. Value 50 fund looks like the S&P 500 index, the total returned index in Canadian dollars, is up about 15% year to date. We are about 8% year to date, so we're lagging about 7 percentage points. The reason, well documented, and actually we got a good chart on our website showing year to date. We were, from the beginning of the year up until March, let's say, we tracked the index pretty well. But what happened was we decided to lighten up, if you will, on the FANG, and that accounts for the difference. We are value managers after all, and when you see the valuations that they're trading, particularly Facebook and others, so we reduced our exposure, and that's hurt us this year. But if this market's for real, and with interest rates actually normalizing, etc., then value. Maybe this is
well, I'll take
the
the
year
shot with a value fund this
Yeah.
year.
So
okay. Now let's
there
the
you
other
go.
story. Of course, it's Canada, and then we'll.
Canada. I mean, the total return index is a little over 2%, and we're just a little under 2%. So. Again, stock picking in Canada, you know, we're trying to certainly get around. We have no cannabis stocks to speak of.
Good.
So
Cryptocurrencies, by any
no
chance?
cryptocurrencies, no cannabis stocks. I know people were saying, "What? You don't have cannabis stocks?" I know, but I think the day of reckoning will come on the cannabis stocks, and I'm looking at the calendar of October 17th. That's when it's legalized. So finally, we'll get. And the numbers on the market value of these cannabis stocks is, I mean, makes probably the internet look crazy, but the internet stocks back in the day. But no, so what probably will happen is once the fundamentals on those cannabis stocks start to happen, then obviously I think a lot of them will crater a long way. And obviously when the fundamentals start happening, when the earnings, sales, then...
Well, they built enough production to do billions of tons of the stuff. I don't know, the market's going to be that strong. Okay, let's go back to the U.S., because I remember the year got started, you know, great guns, and then we had the big dip, and that's when I was feeling very nervous, and you said, no. But it did. Did it go down? How far did it go down? Almost 10%?
Not much. Yeah, almost 10%. But keep in mind, we went up to the, I think it was late January.
Yeah.
We hit new highs. The market was very strong. And what we've been doing is consolidating. So yes, we've gone down, we've gone sideways, but we're hitting new highs again. So that's no problem. The issue is, in a strong market, it has to consolidate somewhere. And so we've had our consolidation. But again, that doesn't take away from what we figure is fair market value, around 3,200 on the S&P 500.
Ooh.
So.
Well, yeah, but doubters like me, cynics like me said, well, this is Trump. Everyone realized he's a lunatic. He started global trade wars. The bubble's going to burst. And you thought otherwise.
Absolutely.
What do you think is coming, though, for the U.S.? I mean, he's 40% his popularity. We've just had this big controversy about the Supreme Court appointment. The elections are a month and a half away. Does the bubble burst then?
No, because I think actually he gains seats. The Republicans will, I think, gain seats in the House. They will not lose the House. And again, I think people are misreading, certainly Middle America. I was just down in Cleveland, Ohio, and there's a little bravado there about Republicans and Trump and their whole situation. I mean, Cleveland was dead on its back during the Obama years, but you know, people are happy. We've got consumer confidence hitting an all-time high of 138. I don't think I've ever seen a rating that high, or the number. I mean, the markets are hitting new highs again. So again, people want change when things aren't working. And look, I did a blog 2 years ago when Trump won. It's in two parts. And what I see in Donald Trump, and again, forget the tweets, whatever, but, you know, what I saw, you know, again back then is just allowing business to be business, to invest in their business. You know, you just try to cut through the red tape.
With $1 trillion deficit, you can do that.
Yes, but again, at the same time, the Fed is shrinking their balance sheet.
Right.
So if something were to happen, I mean, all we're doing is transferring monetary action, which certainly over the last 8 years, that was the only thing they could do because the Republicans wouldn't pass anything Obama wanted to do on the spending side.
Yep.
And now we're loosening up. Basically, I would argue we need $1 trillion deficit because if something goes wrong and the Fed basically shrinks the balance sheet too much, could throw us in depression. So I think that we're trying to rebalance out, if you will, fiscal policy and monetary policy. But at the end of the day, the numbers look good for America.
Okay, well, let me try this one on you. Sell high, buy low. Time to sell U.S. and buy Canada. Canada's flat as a pancake.
I was on BNN with Catherine Murray, and I said, you know, is Canada cheap enough that I sell my U.S. dollars and buy Canada?
Yes.
No. So look, you know, as all clients here, myself personally, we have a lot of U.S. dollars.
Yeah.
I see no reason to sell $1 American to buy $1 Canadian here. There will be a time where that trade actually makes a lot of sense, but certainly not today. I think there's more downside.
I remember when you went the other way, the Canadian dollar was 102.
We sold everything at 102. You know, we take it. Here it is at 77. I still think it goes lower.
Yeah.
And again, if you look at all world markets, you know, U.S. equities are the #1 asset class in terms of rates of return. So look at some of these emerging markets like Turkey, Brazil. I mean, Argentina.
Yeah.
So again, we're going to get more of that, not less. So no, I'm quite comfortable with my U.S. dollars. Thank you very much.
Great to catch up with you. I'm sorry it's been so long, but I will be in next month for sure.
Michael, anytime's a pleasure. Thank you.